is doing well. The markets have been nice and volatile, and there's opportunities to do some intraday trading. There's opportunities to do some investing. There's opportunities to do some shorting, depending on what you're interested in the market. The key is for you to learn, to educate yourself, and make some money. So today, I wanted to give a little bit of an update on the portfolio that I put together about 2 months ago, and to see how it's doing, and also have a little discussion about some of the different stocks that are in that portfolio, and also just some of the things that are going on in comparing different stocks, different types of analysis. It hasn't been a fully profitable couple of months, yet it's been something that right now, like anytime, there's a good opportunity to get into the market. I was doing some consulting with one of my dear young friends, and just starting out his portfolio. And perhaps towards the end of the video, I'll share a little bit about what he picked, and also a different way for you to, again, start your paper trading. For those of you who are starting to get in the market, get involved, get active, get curious, and start taking some action. And so, how's the portfolio doing from a couple of weeks ago? And I have the full portfolio here that I'm going to talk around. And if we look at the lowest profitability, it is a stock called JP Morgan. And JP Morgan is arguably the strongest bank in North America. And it has only gone up 1.21%. It's currently at 91.73. Now, in this particular stock, it has had a range of 88 to 98 in the last 6 weeks. And that's been something that I've been looking to trade actively when it drops to about 90 to buy. And then if it comes back up to 97, 98, I'm looking to sell. And I generally do it in a lot of 50 shares, and that allows a nice profit of $300 to $500. And if you can do that once or twice a month, it generates a nice little revenue stream. The second stock is AT&T. Now, again, the major reason I did buy this one is for the dividend, which is north of 6% right now. And again, if you are looking to get started and you want to have dividends as part of your portfolio, I still suggest AT&T being a nice equity to be in a relationship with. I should caveat right here is I'm not a financial advisor. I'm simply here for education and to answer some questions and to develop an awareness of monitoring a portfolio on a regular basis, to talk about it, to ask questions, and to look for ways to have a balanced portfolio so that it will be secure and active for you, whether the market's going up or down. Now, the next position we'll take a look at is Google. Google is up about 23.32% since the start of this portfolio in March. And again, it has had some good movement, and as have the mega stocks, the mega, which tend to be the strongest technology stocks, which if I was to choose the full portfolio, this is a sample portfolio. Yeah, I've kept it on here on Yahoo Finance as a way to paper trade, and I do hold a couple of the different shares. The next one is Apple. Apple reported very strong results. I have also been playing a little bit of the technique with Apple of buying some and selling some. It had a nice pop after its financials were released last week, and currently trading at 302. I got in at 245 this time, and it's up 23.38% since the start of this portfolio. The next one is Amazon, and I have actually dipped my toe into Amazon recently with some of the movements. If we would have bought in March, it would have been 1885, and right now it's trading at 2351. It had, again, very strong results, and it's going to continue to have strong revenue results. Yet they allocated $4 billion to deal with the COVID-19 issues, which I think was pretty conservative. Yet it is something that Amazon sales continue to be outstanding. And if you wanted that for the long term, it's likely going to continue to grow. It might have some legal issues, so you might have the opportunity to buy on dips, and that's what I'd be looking for to increase my position in Amazon. The next stock that has performed very well, and it's partially because we're in a bull market with gold right now, picked it up originally at 27. In fact, I invested in American Barrick many years ago. And so I've sold about 4 times little blocks over the last 2 months. I'm currently at 37.69. And since we started this portfolio, it's up about 38%. And the high flyer in the portfolio, which is not a surprise if you remember the rationale for picking it, it was Tesla. And if you listen to Elon Musk, he does say some outrageous things at times. And so last week when he said the stock was oversold, it dropped about 10%. And I picked up a couple of shares. In this portfolio, we would have been bullish at 530. It's currently at 778. I understand he might be going on to Joe Rogan today, and there might be some added volatility. But since we put some allocation to this portfolio, it's up 44%. So overall, this paper portfolio, since we started in March, it's up about 21.9%, and it would have cost $43,000 to start it, and that's where it's at. So let's move away from that. And now the idea here is you start this relationship with these stocks, and you look for ways to buy and sell when they go up and down, because you're not necessarily selling your whole position. And this is a strategy of investing and trading the portfolio. When if you do like the stock and external event happens and it gets hammered, yet you still are very confident in the fundamentals of the stock, you might buy some more. So your portfolio, if, for instance, with JP Morgan, if you've got a core 150 or 200 shares, if it goes down 10%, you might pick up a couple of more shares. And then if it goes up, you might sell a few more shares. And for me, JP Morgan has been the one that I've been doing that most. And it is something that I can recommend or suggest to people to, again, develop a longer term relationship with these stocks, allow them to educate you, spend some time studying the financials, study sometimes on the fundamentals of what moves the market. And it allows you to have a longer term perspective. You're not getting in and out all the time, yet you're keeping a core position and you're trading around a core position. I find JP Morgan may be very good with that. I'm going to be exploring a little bit more with Apple doing that, Amazon doing that, and Tesla doing that. So something that can allow you to move in and out and allow you to have a long-term relationship, and something that can allow you to really develop a relationship with the market without having FOMO, or the fear of missing out, to be your dominant component. And so if you've learned something today about using Yahoo Finance as a way to paper trade, moving some of that into the online trading, Wealth Simple Trade is one that's very popular in Canada. Another one in America would be Robinhood. And we'll also explore other platforms that will allow you to go into the market with perhaps your retirement fund for some of your tax beneficial funds, and a way for you to be more proactive in the market. The stock that is not in this portfolio, that is actually a portfolio that I've looked at, is Shopify. Shopify in the last couple of days has overtaken the Royal Bank of Canada as the highest valued stock in the stock market. This is something that has happened in the past in Canada. One of the most famous is Northern Telecom. It was the most highly regarded, most valued company in Canada, and even most valued in North America, before it went crashing down to zero. And so my caveat emptor to any of the investors is that markets, yes, they can be very generous. And right now, Shopify is what's called a momentum share. And people are piling in, they fear the fear of missing out. And so it's taken it to levels where now this relatively new company has taken over the #1 value spot in the Canadian Stock Exchange. If you do a financial analysis of it, it's going to seem very rich, going to be very expensive. And that's something that is called momentum trading. And I'm going to address that in a separate video. So stay tuned. If you find some of the value today of use, please subscribe, like, add a comment. I'm very open to starting conversation. I'm also learning much more about YouTube right now and looking to share some of the wisdom or experience, but also some of the bad trades that go on. Because in the last month, I actually had a trade where I took some of this analysis, so looking at DHT and NAT based on a Kramer report. And I did put in a little bit of money for a momentum trade. And guess what? Boom! Right down. Yes, its position is down about 14%. Not very happy. I should have known better. Yet it is something that I was taken over by the high dividend, the attractive situation with the limited supply of tanker supply. Did a bit of the analysis, decided whether NAT would be better or DHT, decided to put a little bit of money into DHT, and guess what? Fingers burnt. And so I'm still looking to unwind that trade, and I haven't decided whether I'm going to welcome in the dividend, which will be a nice dividend. They've definitely got the cash flow to cover their dividend, yet the stock will drop. And so that's something to be aware of. It does happen, and it is something that I wanted to come full disclosure today with you, is that sometimes, as some people like to say, bulls make money when the market goes up. Bears make money when the markets go down. Pigs get slaughtered, and sometimes you get a little greedy, and that is something what could happen. So definitely a learning experience. Yet if you're going to trade in momentum, you will get burnt. It's part of the lessons of the marketplace, and I'll talk a little bit more about momentum in a future video. If you found this to being some use and some good conversation, please like, subscribe. I'll be doing some further analysis. I'll be keeping you up to date on this portfolio we put together in March, and also highlight any of the market perspectives that's come into play. So today, I'd like to thank you very much for your listening. Welcome your like and your questions, and you have an absolutely great day. Trade profitably and enjoy.